Hi, my name's Mel DeWeese, and I believe that the more good, honest, hardworking people that build in AI and cryptocurrency who have sovereignty, independence in mind, the better our collective future will be. And this is because we are in a highly dangerous, in my opinion, state of centralized power. And my background is in HR and insurance. I've worked the majority of my big girl career in HR and insurance, and I still am an insurance broker and HR advisor to this day. And I've recently picked up an interest in AI, mostly for research purposes. I am a highly curious person. I am curious about cryptocurrency and AI. And I see a massive opportunity for cryptocurrency. And I've been watching actually the cryptocurrency market since about 2019. And I never was fully invested into any crypto or digital assets because I didn't see an on ramp. And now in this new world of AI, I do see an on ramp for cryptocurrency. And I do think that we will continue down the road of implementing various cryptocurrencies into our financial markets. And I have several videos explaining how the agentic economy is brand new, and these agents will be assisting and are currently assisting consumers in purchases and will continue to do so. And this will continue, this growth in this agentic AI economy will continue to grow exponentially. And with that, I have prepared some information about AI data centers. Basically, I work with my Hermes. I have a Hermes agent and just some housekeeping items. I like to say Hermes. Most people say Hermes. I just like the way it sounds better. Hermes and he works in my AI lab. He is my AI agent that I have built to the best of my ability to assist me with some operations. He assists with downloading software and testing software and helping me navigate this crazy world of technology because I am not a technology expert. Technology is not my native tongue. Okay. I am learning some things along the way, and I may use some terminology that isn't technology specific language, more layman's terms, just because my background is not in the area of technology. And as I chat with my Hermes throughout the week, we come up with presentation ideas. And I use those discussions to fuel the presentations that I bring to you. And that is exactly what happened today. And one of my questions in one of my previous videos was who paid for the data centers? And my argument in short is that the taxpayer and the ratepayers for electricity are major funders of this whole infrastructure. And I want to bring forward some transparency in this space. It has been top of mind for me, and I believe that it has been top of mind for a lot of people. And as this economy advances, it will be very interesting to see who the winners and the losers are. But the losers so far have been the people, the average everyday citizen sitting back, trying to learn all of this new madness, how to use all of these new AI tools, watching data centers be built up all across the country, ruining beautiful landscapes, centralizing information for big corporations and governments alike, and fighting over this intelligence. And I don't see a whole lot of winners. I see a very few number of winners. So I want to talk about it. So let's get into it. And before I go too much farther, please give the video a like, even if you end up leaving. It's a nice little tip jar. You know, when you go and pick up a coffee, are you the person that doesn't tip the barista, or do you tip the barista $1? If you're someone that tips the barista $1, thank you for giving me a like. Just walk in the door, hit that like button, write a comment, just write hi, hello, nice to see you. Thanks for thinking of us. I don't know, something. Just give a nice comment. Subscribe if you want to hear more from me. But at the very least, please give me a like. Please, if you're watching this video. All right. So let's get into it. Couple of weeks ago, I did a podcast on who built the data centers and who owns the data centers. Because I have a problem with the data centers. I don't like driving and seeing these ugly data centers. I don't like seeing this beautiful American landscape being bulldozed over and data centers being built. And it would be one thing if, okay, we're building these huge data centers and then that's it. That's all we need from now until the end of time. But the concern that myself and many people like me have is that the uses, the projection of how quickly, however, one of the really concerning parts is that AI usage is 10xing and their predictive models like Google and OpenAI have these predictive models for what they believe AI use requirements. They're projecting out what they will need in regards to data centers in 1 year or 10 years. They're looking 10 years out in many cases, and they're expecting usage to go up by 10x. So that means that the data centers we have today, we're going to have to 10x that. And I already hate them. And then, where are we going to put them? Is there even enough space here? And are they going to end up putting it on the backside of the moon or in space somewhere with Elon Musk? There's all this craziness going on. Okay. All this speculation, all this craziness, all this prediction stuff going on. And so I asked my Hermes to create a presentation for us to review on who made the data centers, who owns them, who made them, who's paying for all this stuff. And let's just see what he has to say. I have a disclaimer that none of this is my opinion, and I'm a comedian, and none of this is financial advice. Don't take me seriously. And I don't know what I'm talking about. This is coming from an AI agent. It's completely experimental, and let's get into it. Let's just see how this goes, and we'll see what he says. All right. So, why do you do this to me? Okay, Hermes, what are you telling us? Follow the money. Who built the data centers? How did the government fund data centers and nuclear power? That's another one that a lot of people do not understand, is that it's not just the data centers, it's the power and the energy grid around the data centers. Because you can have the biggest, baddest ass data center in the whole world, but if you don't have the electricity to power it, it's not going to do any good. It's just a giant paperweight, eyesore, useless piece of garbage. So we have to have nuclear power. Okay. And nuclear power is very expensive, especially here in the United States, because obviously it's highly regulated. So where did all this money come from? Who's paying for all this? So the largest corporate capital expenditure cycle in recorded history, and the nuclear deals powering it. All right. So we have CHIPS Funding Act, $280 billion. Amazon nuclear capital expenditure sprint, the largest corporate CapEx cycle in history. So I am coming into this fairly green. You're going to be finding out a lot of this with me. I haven't done a ton of research in this area. I have to be very careful on what I research. Okay, because I dive in. I go deep, I go hard, I go all the way to the bottom. Okay. And that's one reason why I love Hermes, because he helps me kind of focus and I can redirect. But anyway, so 760 billion in 1 year, the largest corporate CapEx cycle in history. So 4 companies, we've got Amazon, Google, Meta, and Microsoft. Shocking. Are you shocked? I'm just shocked. 4 companies 1 year, $750 billion. This is not normal investments. This is an arms race for AI infrastructure. So we've got four hyperscalers spent $410 billion in 2026. They plan $725 billion. That's a 77% increase in 1 year. This is according to Yahoo Finance. Yahoo! Adding Oracle, five largest providers: Microsoft, Alphabet, Google, Amazon, Meta, Facebook, and Oracle collectively committed $660 billion in capex in 2026, nearly doubling 2025's levels. Okay, that's part of the story. All right. So why did they invest so much? Maybe because they got some money from somewhere else. If they spent that money, they knew that they'd get a certain amount paid for through the CHIPS Act and all these, the Data Act of 2026. The government seeded the ground. CHIPS Act, $280 billion. The infrastructure for AI did not appear from thin air. The government funded programs, built the foundation: chips, research, and nuclear power. The CHIPS Act, about $280 billion. Okay. Then we've got CHIPS TSMC in Arizona. And then we've got Microsoft plus Constellation, the 3 Mile Island reborn. Microsoft signed a 20-year PPA to restart the dormant Unit 1 reactor at 3 Mile Island, the site of 1979 partial meltdown, rebranded as the Crane Clean Energy Center. So 3 Mile Island just does not have a good ring to it because of all of the bad press that 3 Mile Island had. So they're going to call it the Crane Clean Energy Center. Is the new, it's all new name, which makes it all better. They rename it and it just makes it all better. It's not 3 Mile Island anymore. That doesn't exist anymore. We don't have to worry about that anymore. 3 Mile Island, no. We've got Crane Clean Energy Center, guys. It's all going to be okay. And it was funded by the government. So it's all just putting money back into Microsoft. It's all fine. Carbon-free electricity. All right, so why it matters. This is the first time a commercial nuclear reactor has been restarted specifically to power a single company's data center. It sets the precedent. AI companies can and will reopen dormant nuclear plants for their own use. So yeah, they're investing billions, but guess what? You're investing billions too, because you're funding power plants that are powering these data centers. So we've got Amazon, Google, and Meta all went nuclear in 2025, 2026. So Amazon in the SUS plant in Pennsylvania will power until 2042. And if you are interested in building with AI, or you are learning more about AI, want to learn more about AI, or perhaps you are someone like me that dove head first into the AI space and you need someone to talk to. Some of these sessions over here are like counseling sessions. And I would highly recommend that you join a community. I do have a community that I belong to that helps me out immensely. We are constantly looking to add more and more meetings every day to meet the needs of the community for education and community support and so on. So in the video description down below, I've included a link to my Discord. I've also included a link to all of the articles referenced today. So under tax credits, the Section 45U zero emission nuclear production credit created the 2022 Inflation Reduction Act. The zero emission nuclear production credit, which was created by the 2022 Inflation Reduction Act, pays existing reactors like the ones being restarted by Microsoft, Amazon, etc. So instead of having to restart or start a brand new project, they're rebuilding these nuclear power plants and renaming them like the ones being restarted. The Joint Committee on Taxation projects this reduces federal revenue by $13.1 billion over a 4-year period. What CHIPS Act does not cover here, it's 280 billion is authorized, not appropriated for semiconductor manufacturing and R&D. About 52 to 53 billion is actually being appropriated. 33 billion awarded to date. It funds chip fabrications, not nuclear plants or data centers directly, so bundling it into the nuclear money trail overstates the connection. Private money flowing to AI frontier organizations. The corporate CapEx side dwarfs the government numbers and is generally private capital. For hyperscalers, plan 725 billion in 2026 capex, up 77% from 410 billion in 2025. Divided evenly, that's roughly 60 billion per month, but this is hyperscaler infrastructure spending on data centers, chips, and powers, not a monthly payment stream to frontier AI labs. Power purchase agreements for nuclear power are private contracts between hyperscalers and utilities, Microsoft and Constellation. Okay, so the power purchase agreements of the nuclear power plants are private deals between the hyperscalers and the utility companies, but many of them own their own utility companies. So, like Microsoft owns Constellation, Amazon owns Talent, Google owns Elemental, Meta owns TerraPower, and all these others. This is corporate money, not government funds, even though the government, and that's what this article from Perplexity is saying, that this is corporate money, not government funds. Well, but the government paid for the restart of these nuclear power plants. So how is it private money? It's very circular, is my point. Though the underlying generation may carry government-backed financing, okay, Frontier Labs themselves are burning cash funded by venture and investor capital. It's projected that Anthropic, and that's interesting because Anthropic just went public, and we're going to see how their earnings are reporting and get to dive into more of the disclosed numbers on their earnings report. OpenAI has reportedly spent 50% of its revenue on inference compute and 75% on training compute. How AI companies fund consumer discounts. Investor venture capital absorbing losses, startup developer credit wars. AI offered Y Combinator startups and free credits. The government to AI company money flow observed runs the opposite direction in procurement. The GSA's One Government program has negotiated the federal government discounts of up to 90% from vendors including Anthropic, AWS, and Adobe. The government is the buyer getting a discount, not the subsidizer of consumer pricing. Where the money starts and ends, congressional appropriations and IRA/CHIPS Act, tax provisions to loan programs, to Office of Energy and Dominance financing, to Treasury, federal bank financing, and IRS tax credit mechanisms. Government subsidized de-risk nuclear generations, loans, guarantees, and tax credits, fed electricity into plants, and then sells power to the hyperscalers under private PPAs. The government lowers the utility costs of capital to build or restart the plant. The hyperscaler pays market/contract rates for the electricity itself. That's an indirect connection through the finance stack, not a direct payment from government to AI. Okay, so the way this works is the government subsidize/de-risk nuclear generations for loans and also tax credits, and then which feeds the electricity into the plants that then sell power to these hyperscalers, these AI hyperscalers and data centers. The government lowers the utility costs of the capital to start or restart the build for a power plant. The hyperscaler pays market or contract rates for electricity itself. That's an indirect connection through a financial stack, not a direct payment from the government directly to the AI company. Okay. Mel DeWeese is not saying that the government is directly paying the plants. And Melissa is not saying really anything. Melissa is just reading articles that my agent Hermes produced, and also some of this is from Perplexity as well. But the bottom line is the government is meaningfully subsidizing and de-risking electricity generation layer, mostly through below market value loans, loan guarantees, and production tax credit for nuclear, totaling identifiable federal exposure in the tens of billions. It is not based on available public sources directly subsidizing AI data centers or construction, hyperscaler capex, or consumer AI product discounts. Those remain privately financed through corporate capex, equity, debt, and investor absorbed losses. All right. So that's what I had for you today. Tax credits. At the end of the day, there are three distinct buckets for government spending for nuclear. The number one is the direct federal loans. Okay, must be repaid at below market rates. So 1 billion in these loans to Constellation Energy closed on November 2025 to help restart the 3 Mile Island, which has been renamed the Crane Clean Energy Center. All right. And this is the Bill Gates one. This is the Microsoft one, which will sell power to Microsoft under a 20-year deal. Terms 0.37% per year over comparable treasury yields. Boo-hoo. Borrowable through November 2030. So the government gave Bill Gates a low interest loan that's just 0.37% above the treasury yields, which is far below what we get charged when we go to a bank and get a loan for, let's say, a mortgage. Most of those are padded out based off of US treasuries by about 1.5%, I believe is the average. But Bill Gates gets a deal because, for whatever reason, 0.37%. And it's basically a line of credit from now until 2030. Okay. And Constellation's total restart cost is about 1.6 billion. So this loan covers roughly 62% of it. The source of the remaining 600 million isn't specified in available reporting. Okay. So government funding, more than half of it. Okay, and then 1.6 billion and 3.2 billion direct loans. Federal financing mechanisms are used to fund subsidiaries of American Electrical Power as of October 2025. All right. And 26 to 26.5 billion in direct treasury loans. They're guaranteed loans to Georgia Power and Alabama Power, the Southern Company subsidies. And this closed as of February 2026 for grid and nuclear adjacent capacity. Department of Energy estimates this saves taxpayers or ratepayers, payers of electricity rates, over $300 million per year in interest versus commercial financing. Okay, so none of these are grants. It's the government acting as a lender or a guarantor at cheaper than market value rates. The real subsidy is in the interest rate discount and default risk transfer, not the face value of the loan. Next, we get into federal loan guarantees. 17.5 billion conditional loan guarantees announced in June of 2026. So just about a month ago. So 17.5 conditional loan guarantees were announced in June 2026. Backing federal financing loans. Okay, backing the backers. Department of Energy Loan Programs Office to Office of Energy Dominance Financing has statutory authority for up to roughly 40 billion in guarantees total. And this is where we have three money trails converging on AI compute all at once. So we've got hyperscaler CapEx, 760 billion in 2026. That's a 77 year over year growth. Then we have Government Chips Act, which is 280 billion for semiconductor manufacturing. And then we have the nuclear PPAs, which is 10,555 plus megawatt dedication to AI data centers. And then we have ratepayer pledge, 80% of DC power is covered there, which includes just 7 companies. And energy demand growth is 4.4% in 2023. And that's grown to 10 to almost 20% of US electricity in 2030 for AI data centers. So the answer is, where is the money going and where is it coming from? So into chips, the CHIPS Act is 280 billion, into buildings for hyperscaler CapEx, 760 billion, into power, nuclear, the government funded, and the foundation. The hyperscalers are spending historic sums on top of all of that. And the nuclear industry is being rebuilt to keep the lights on. The money trail all ends at one place, which is AI compute capacity. The caveat: announced spending is not delivered power. Okay. The SMRs are years from operational. The money is committed. The question is whether or not the megawatts will flow. And on top of all that, we have a government protection pledge for these companies. So the White House ratepayer protection pledge protects these companies so that if they go out of business, they basically can't go out of business. As of March 2026, 7 largest AI companies signed a voluntary pledge. Hyperscalers must pay for their own power, not pass costs on to the consumer. The signatories were Amazon, Google, Meta, Microsoft, OpenAI, Oracle, and xAI. They committed to build, procure, and fund generational capacity sufficient to cover their data center electricity demand and pay for grid infrastructure without passing costs to taxpayers or ratepayers. By July 2026, the pledge now covers 80% of all power deliveries to U.S. data centers. Congress is moving to codify the protections into law. The attention: this is a voluntary non-regulatory commitment. The pledge says hyperscalers must pay, but the enforcement mechanism is political, not legal. If hyperscalers break the pledge, the consequences is a press release, not a fine. So people feel that, we promise, and it's like, okay, well, we don't trust, the owners and decision makers of Meta and Microsoft and OpenAI and Oracle, okay? And many people don't trust Elon Musk at xAI and Amazon and so on. Data centers could consume 9 to 17% of U.S. electricity by 2023. Data centers could consume 9 to 17% of U.S. electricity by 2030. The power damage is growing 3 times faster than conventional server infrastructure. The grid is the new bottleneck. So in 2023, the actual power demand was 4.4% for data centers. In 2028, it's about 6.7%, and 2028 estimated high of 12%. So again, it's somewhere by 2028. Low estimates are about 7%, high estimates are about 12%. And in 2030, they're expecting this to go up to 9% on the low estimate and 17% on the high estimate. So 45% US share of global AI DC capacity, and 400 to 600 terawatt US DC electricity by 2030. So data center energy consumption statistics, comprehensive 2026 data on AI data center energy consumption, the energy footprint in 2026, the data center electricity demand crossed a meaningful threshold in 2025-2026 from marginal share of the total data center load to the dominant growth driver. The IEA's 2025 Energy and AI report projected global data center electricity consumption rising from 415 terawatt in 2024 to roughly 945 terawatt by 2030, with AI accelerated workloads accounting for the largest share of growth. This page consolidates the public 2026 data. All right. And that is basically, it's showing the AI share in 2026 being about 37%. And then in 2030, that would grow to about 46%. So that's where this 45% number is coming from right here. All right, don't fall for the PR hype. Don't fall for big tech's PR hype. The Bulletin of the Atomic Scientists warns, the nuclear deals sound impressive, but next-gen nuclear is years from operational reality. The Bulletin's argument, Amazon and Google are expecting to spend $200 billion and $185 billion, respectively, during the upcoming year on data centers. The spending is real. But the gap to match it, the nuclear power gap to match it is not yet online. The gap between the announcement and the delivery, so SMRs, small modular reactors, are not yet operational at a commercial scale. Meta's Oklo deal involves 16 Aurora powerhouse reactors that do not exist yet. Google's Elemental deal prepares sites for reactors that have not been built. Amazon's was initially rejected by the FERC. The money is committed, the megawatts are not yet flowing. Operational power flowing today, Microsoft's Constellation 3 Mile Island, which they've renamed, has restarted. Amazon Talon was rejected. Okay, announced but not built. Meta's 16 reactors not yet licensed. Meta's TerraPower up to 8 plants. The first one is under construction in Wyoming. Google's Elemental, they've got 3 sites, but SMRs not yet deployed. Amazon's X Energy investment, commercial deployment is years away. The pattern is existing nuclear plants are not being reopened. New SMRs are being funded but not yet built. The gap between the pledge and the power is 3 to 10 years away. And as a Californian, I just have to be reminded of the train to nowhere. Okay, we had an $8 billion, which at the time was a massive amount of money. Now looking back, it's like, was that it? But I want to say it was about 20 years ago, something like that, where California proposed this bullet train legislation, and the goal was to build a train between Sacramento and LA so that our capital could be connected with one of the largest metropolitan areas in LA, and business could function better, and politics, and it would be so much more affordable and so much faster. And everybody hates driving on the 5 on that freeway that is just really boring and straight all the way through the middle of California. Yeah, let's put a bullet train there. We want to be like China. We want to be technologically advanced. Let's build it. And all the money was spent, but we still have no train. With all this AI madness going around, I wanted to bring forward just a very high level overview of the situation that we are currently in and how these AI companies are scaling 10x. These AI companies are expecting to scale and how much power they are going to need and the cost of the data centers. It's costing the taxpayers, it's costing the ratepayers, people sharing electricity with these people, and that the owners of these utility companies are now the most rich and powerful, some of the most rich and powerful companies in the entire world. So it's controlling large amounts of resources, not just renting intelligence or holding intelligence in this data center, centralized power, but also centralizing power as far as electricity is concerned. So, not good in my opinion. I don't like it. And maybe you do. Let me know in the comments. Please give me a like, a subscribe, follow along, and we'll see you next time. Thanks, guys.